Well, the markets seem to be staging a bit of nervousness here ahead of the all-important jobs report that's out tomorrow. This particular report is more important than others just simply because the Fed has set the stage for an interest rate hike should we continue to get what they consider strong reports on an economic front. So this jobs report is generally a significant report, but this one in particular, I think all eyes will be upon the data. And as we wrote earlier, we need to be careful of how the market reacts. There's a saying that, and this tends to hold true, if the news is bad or perceived to be bad, yet the market rallies, that's a sign of strength. If the news is perceived to be good, but the market falls, that's a sign of weakness. But ultimately, it's irrelevant what the news does or says. So in other words, it's irrelevant whether tomorrow's report is strong or weak. What's important is how the market reacts to this report. So if you start to see your stocks hitting your sell stops and you start to see the market rolling over, that's a very important clue that maybe you should be moving more of your portfolio to cash or to the short side if there are any good short sale setups. Contrary to that is if the market stages a good rally. I mean, keep in mind that the markets have been kind of in a funk for the last 3 weeks. They haven't really been able to get much movement. The S&P is on the verge of hitting its 50-day. The Nasdaq and the S&P has also been caught in kind of a sideways motion for several weeks now. The Nasdaq, on the other hand, it hasn't really been able to get off to the races over the last 3 weeks. It's just been caught in this up-down type of pattern. So if we start to move to the upside on volume as a result of tomorrow's report, then that's also a clue. You'll start to see, more importantly, your stocks will start to act in ways that are constructive and may offer additional entry points. So be open to any possibilities. That's the take-home message here. Now we wrote a bit of an extensive report on the precious metals. While the price of gold and silver are influenced by many factors, which accounts for their sloppy uptrends, historically speaking, gold is going to be primarily guided by the amount of money that gets printed, and we know that central banks around the world some of them have gone to a negative risk interest rate environment by printing as much as they have. While the U.S. Fed jawbones and talks about raising rates for a second time, that might just be a pipe dream. And that is to say that even if they did hike rates, say in December, I think the odds now are over 50% of that happening. It might be a one-time thing, and this would not be a stranger to history. This has happened before, where the Fed does a one-off hike, and that's it. In fact, that one-off hike was probably a bad idea because then the markets had a big sell-off and a big bear market after that one-off hike. So that anything is possible. Again, what the Fed does, they're not perhaps the smartest bunch. Well, let's just say that they're a political bunch. So it's not a question of smarts; it's a question of what is politically correct. That's what they have to do. That's really their mandate. And right now they are being pressured to raise rates again. And if the data, I suppose, gives them that entry, in other words, if tomorrow's jobs report is strong and we get more signs of a strong economy, then the Fed will probably have no choice but to raise rates so that they don't appear hypocritical. And the markets actually, as we wrote earlier, may do exactly what people don't think. They might actually, maybe after an initial sell-off, they might actually start to stage a rally, a strong one, because now the perception is the economy is on the mend, finally, after, what, 7 years of this money printing business. And it may not be true at all. Keep in mind, in the late 90s, there were a lot of internet companies that had no earnings and no sales even, and they were doubling, tripling, because the perception was that internet was the holy grail. So these companies, you could make a lot of money off some of these companies by being quick on the trigger, quick to get in, quick to get out, because it's all about perception in the end. That's what causes the institutions that sit with the big money. That's what gets them to pony up and get the big money flowing into the markets, which creates the uptrends. So again, it comes back to the very simple principle of watch your stocks in terms of how you want to cast your own portfolio. And of course, it comes down to your risk tolerance levels, your trading personality, and whatnot, which is all a very personal journey. So back to gold and silver. These things have pulled back quite nicely, and who's to say maybe they're not done with their small downtrend here.
Hey, Dr. K.
Look at GLD. Yeah.
If I look at both of these, they're actually both in what I would call undercut and rally land. So if you look at the GLD, it's just barely undercut this July low up here. You guys see that? And
yeah.
So here's the low here, and it's just barely undercut that. So it's in a logical undercut and rally area. And if you look at this, this really is just a big consolidation, even though it's been coming down with talk of the Fed easing, or I'm sorry, raising rates. And personally, I don't think tomorrow's jobs number is going to be all that strong. So I think the wild card here might be that the jobs number shows the economy is actually weak. I think the economy is weak. This strength is a bunch of BS as far as I'm concerned. But and what I'm seeing here is the setups in these turning more towards what you would call undercut and rally land, or as I like to call it. And you can see here you've undercut the prior low in this consolidation, but you're still well above this breakout point at 17 on silver. So so they're in position to potentially rally. And if we had a weak jobs number, which I bet you that's what we have, although I'm not going to try and game this thing, but I think it could get the metals going again. I don't necessarily think it's over, but it's a very difficult technical trade. In other words, if you see strength or pocket pivots or gap up moves, it's tough to buy those, and sometimes they will go higher. Like you can see in silver, that happened in late June. You had a buyable gap up, and it actually continued higher. Then you had this gap breakout here that ended up being sort of right up here at above the 1950 level in early August. That ended up being something of a evening star type of formation, and then that was at the top. So it's tricky, and I think it's more an event-driven trade. So I think if you think there's potential that tomorrow's jobs number will keep the Fed from raising, you could consider taking a small position. That's my thinking, and I might try doing that. See where things lie at the end of the day. Anyways, just wanted to throw that in.
Yeah, no, thanks for that. I think that basically the bigger issue in terms of gold and silver is are they going to remain in this uptrend which began last December when they found their floors? On a fundamental basis, absolutely, I would imagine so, because the fact of the matter is that the global economy remains very unwell. The Fed is cognizant of that. I really don't see them decoupling from the rest of the planet and starting to hike rates in any meaningful way. These central banks move in unison. So ultimately, with other central banks continuing to unleash additional levels of quantitative easing into the system, that's their trend. Their trend is to go more negative in terms of interest rates. The U.S. would not be able to decouple from that. There's just too much interconnection in terms of the way economic trade works, in terms of just the global economy. It's all interconnected in the deepest of ways. So the Fed, it's a pipe dream for them to think that they can start hiking rates in any meaningful fashion. Therefore, I think the trend in gold is intact. Therefore, buying on weakness, because as we have mentioned, these instruments like GLD, SLV, they trade very sloppy in wide-banding manners. So buying these things on weakness, taking a small position, and you can keep your stops tight. You could buy it. You could buy a little bit here, and you're out if it, say, breaks today's low. So that's not a whole lot of risk. And on a technical level, it looks like, on the one hand, GLD is coming to just the top of its prior major highs, and it has been in this pattern for quite some time now, since June. So it's very possible that it's going to find a floor, and tomorrow's report will probably be a catalyst for that. But it could also, of course, if it looks like the Fed's going to start hiking rates, then this downtrend is probably still going to continue. But that doesn't mean gold's off the table. Just because it looks like the Fed's going to hike doesn't mean they actually will. And they can't get away from the fact of the matter of the economy. The economy is what it is, and I think that bodes well for all these central banks continuing to print, therefore gold should go higher in the longer run. And then my favorite instrument, JNUG. JNUG is something like it was more than 50% off its peak earlier today. This thing is a wild trader. It's wilder than UVXY. But again, with all these instruments, always know how they trade so you can manage your risk appropriately. You know, so if you want to invest in this, maybe, and you're a more conservative trader, maybe you don't want to put any more than 5 or 10% of your capital into this thing. It is a wild horse. But if you look at the pattern, when, you know, if you keep your risk tight on this thing, as tight as you can given the pattern, your upside is huge. So anyway, it's one to consider, but this is a, what is this, I believe a 3X, yeah, it's a 3X type of ETF. So of course it's going to give you the biggest levels of volatility. So always handle these with care. But at any rate, I will go ahead and turn it over to Gil.
Okay, so I think you could be running into some trouble here. One of the things that I'm watching very closely is the fact that we've had these pullbacks in names that had big runs in August. So August was a hot month, and a lot like August of last year, except last year in 2015, August was a hot month on the short side. For anybody who was there, if you recall, there was a big dive in the NASDAQ at the end of August. So August has been a hot month in 2016, but mainly among these hot IPOs, like, of course, Twilio and Acacia, and you got this PI running today on a viable gap up, but it's now trading below where it opened up. So this name's really, really thin, and so I don't really play it, but if you're going to play it, I guess you'd buy a few hundred shares, but expect this thing to be nutty. It's a lot like this other one, TLND. But you know, you're seeing this one break apart. Okay, but the big ones to me are Twilio, which is hanging out in a base. So I could see it undercutting this low if the market gets weaker. So that's a possibility. So I'm watching for that. It's trying to hold along the 20-day as volume dries up. But I think how it sets up is going to depend on what the market does. If the market continues getting weak, then I think you could undercut this low. So same thing goes for Line. Line Corp is actually headed for the low. There was some talk, I think, on Bloomberg the other day about them trying to buy somebody. I'm not sure what that would mean exactly, but I guess they're looking at an acquisition. That could weigh on the stock. So it's come all the way back to the top of this trend line breakout here. And if you draw a line across it, so notice how it held up really well here. Now you may be headed for it again. And that would undercut this low. So, and maybe that sets up a near-term low in the stock. I don't know. Or maybe it's topped, and that's all you get out of it. You get this nice move, and that's about it. It's not like the old IPO U-turns of yore, you know, when in 1999 when the IPO U-turns went nuts, and even more recently when we saw IPO U-turns like Mobileye a couple of years ago do pretty well. So, you know, that's the way this market is, though. You start thinking you're going to get these long moves that are going to last forever, and you can get into trouble if you're not alert. For the most part, though, I see very few of these sort of, say, leading stocks that just keep trending higher, these steadily trending sort of situations. So, I mean, for example, even I would say Weibo is acting pretty well. You had a supporting pocket pivot yesterday, but it's way up there. It's had a pretty big move, so I wouldn't be surprised to see it back down and do some serious base building. And of course, that would happen during a market correction. So, you know, in some cases, I can extrapolate the action that I'm seeing in these stocks, and they're either at the point of no return like Line, or they're like Weibo, and they're way up there and in position for a base building process. Not that they're going to top and it's the end of the world for them, but that they're going to have to go through a period of base building after having some nice upside moves. And this is a very rare trender, but it's been a great stock for anybody who's played it, and we were first onto it down here in early April. So it's been a steady player. It's gotten a little bit parabolic, so you can see that it might be ready to take a break. So I think that's, you have to be cognizant of where these things are and the possibility that in some cases stocks may need to pull back and base build more. So there's a context even with Twilio of it moving lower within the context of a market that's moving lower. So, and what we see here is the S&P is approaching the 50-day moving average. The NASDAQ has more room before it gets to the 50-day moving average, which would then undercut this early August low here. And that might set up a bounce from there if we got more of a correction. So, you know, I think we could be in pullback land, and so expecting too much out of the market at this particular juncture in time after we've seen a very hot August is probably asking for too much. It's what I call the Cinderella principle, which is, as I've mentioned before, the idea that Cinderella only comes to the ball once, and after that she's pretty well done until the prince finds her again, and that takes some time. So I don't think you can expect that some of these things are necessarily going to go nuts right away. Acacia acts pretty well, the strongest one I think of the group, and you had a little pocket pivot here on, what day was that, Dr. K? Monday? Yeah, coming up to the 10-day. Yeah, now you're pulling in, what's our volume rate on this thing right now?
Actually, let me see. Right now it's at minus 28%.
Yeah, so it's drying up as it pulls in the 10-day on. I don't know if it's going to hold. Excuse me. Speaking for myself, I would think that it could test the 20-day moving average, and because it's had a huge move. I mean, the move from here up to here in the span of 5 days is something like, what, 85%, something like that, and that's pretty nutty, so I think it needs some time to back and fill. Therefore, I would be looking for this thing to possibly test the 20-day moving average, and that would occur during or within the context of a market correcting further. So, I mean, the market could go higher, but it kind of feels like it wants to correct here. That's just kind of my sense, but I'm ready to move with the action as it presents itself in real time. So Tesla, it was interesting over the weekend. If you guys were reading the Pocket Pivot and Bible Gap Up review for the week, where we do the weekend review of the reports that were sent out that week, you've got Tesla had a pocket pivot, or tried to have a pocket pivot last, that would be last Tuesday, I guess, and that failed. So over the weekend, I said this thing looks like a short to me, not a long, and this you got this failed move here on higher volume. So that's actually kind of a rollover sort of situation in what looks like potentially a right shoulder type of thing in a fractal head and shoulders. But that thing has come down. It's probably headed for this low. So if you pick that off based on my comments, and I know some people have that I've talked to either through email or Twitter or whatever, have hit this short. And so I'd watch for this low. I can't borrow it, and I haven't really felt like playing any options in it. I wish I could, because I probably would have tried to short it there. It's one of the few shorts here that's working pretty well, but they're in serious trouble, aren't they, Dr. K? I was reading something about they've got some major liquidity problems with bond issues coming due, or interest payments. Have you read about that?
Yeah, no, they seem to have some serious headwinds. Of course, with a company like this that where all eyes are upon it, some of these issues are completely exaggerated or just downright lies. I mean, for instance, the issues of the cars catching on fire, things like that, completely misinterpreted. I mean, these are some of the safest vehicles.
Yeah, I don't think bond.
As we all know,
I don't think though an overload of debt that they can't service is something that anybody's making up, though. Right?
Yeah, no, like I said, some, not all, they have some serious headwinds, and that is one of them.
That's the biggest one, I think.
It is, and it's important to keep in perspective, though, that some of these issues are completely overblown with regard to this company. So it's just a word to the wise that when you look at this news on anything, always do your due diligence to find fact from fiction. And that goes also for their bond issues as well. I haven't looked into it in depth, so I can't say conclusively that it's a serious problem, but indications seem to suggest that it is a serious problem.
Yeah, and we can see the market.
I need to look into it more depth.
The market knew about it ahead of time, because this thing started rolling over before all this came out. So.
And that's the thing about technicals. The beauty of technicals is, who cares what the fundamental reason is? If they say to sell, you got to sell. And fundamentals be damned, or as Ed Sekoda calls them, funny mentals.
Yes, exactly. So it looks to me like they may finally be seeing the chickens coming home to roost, so to speak. in that they built a huge amount of debt up, and the issue of
I bet the
servicing
government.
it could be a problem. What's that?
What do you think the government steps in and bails them out
Well,
like
that's
it's like it's done
the
before?
other problem. The issue here is whether Obama steps in and bails out his buddy Elon Musk. I don't know. Yeah, that could happen too.
Creating moral hazard again.
Right.
Which
So I don't know.
many,
I think we'll see what happens. I don't know. But that's one of the things that makes it dangerous to short. But if you caught that, you've got a nice profit, about 10% on the downside. I'd probably be inclined to take that. Maybe right here, I don't know, unless you're going to hold out for the low down from late June under 190. Anyways, somebody's just mentioning offhandedly that pocket pivot in SLV. Well, I mean, that would be a deep doo-doo bottom fishing pocket pivot, but I wouldn't rely on it as a pocket pivot. I think if you're trying to squeeze technical reasons for buying these things necessarily, like a pocket pivot, that's not going to tell you much. So, and to think that I think is a little bit naive. So, you know, but that's the
well,
thing.
also it's a low quality pocket pivot because it closes close to the low of the trading range. And I mean, if a stock does that, it pretty much invalidates that pocket pivot. I mean, you want to see these pocket pivots close in at least the top half of the range. Of course, it's market context dependent. So if the market had a really bad day and the stock closed mid-bar, that could still be a sign of strength relative to what the market did.
Exactly.
So, you know, always keep that in mind.
Right, and I think that this just a pocket pivot in this position, that's not a pocket pivot. If you've got something trying to round out a base and coming around and further up in the pattern, up in here, say, then it might be a pocket pivot, or if it's had some time to round out the lows of the base. So something like this looks a little better, like back here in June, because of the fact that you had the stock trying to come out of this long breakdown here, but you're so far below these moving averages. Here you were above all of them, so it's a little questionable. Again, I wouldn't. Well, I think buying these things is very much a possibility. I think it's more an event-driven trade than it is a technical one. So, you know, trying to develop some sort of confidence about the thing based on some idea that it's having a pocket pivot, that's not really where I'd want to go with this. So I just buy it on the basis of the fact that I think this Fed is probably not going to be raising rates anytime soon. So, anyways, let's look at some stocks here, just to take a tour. You can see Gigamon, which was Gigamonster for a long time, trying to pop out. I mean, that's a breakout on heavy volume, okay? And it's a pocket pivot, which we put a report out on. And then this thing, it reverses yesterday on less volume, and it's broken back below the 10-day and the 20-day lines. And this is a bit perplexing because the stock has had a pretty good move so far. It's well above this pattern, so it could go into a deeper base building pattern. But it shows you how if you're late to the party and you jump all over strength thinking that this is a wonderful thing. In fact, somebody yesterday told me that they can't bring themselves to buy pullbacks in stocks because that's not what IBD teaches them. So IBD's brainwashed a bunch of greenhorns into thinking that the only way to buy stocks is when they're sticking straight up in the air. But you can see if you try and do that with this stock, it tends to yank back in. So the question is, does it come back into a viable position here, or is it going to break down further and have to form a big base? I would argue that since you've gone up as much as you have, probably you need some time to build a base. So it may pull back down into the 50-day moving average, which of course brings up the possibility of it morphing into a short sale target. That's a possibility too. But I definitely don't think I'd be buying into this just yet. Mobileye is pretty interesting. It has come back from this pullback. It basically filled the gap after this viable gap up that ran into resistance on the left side up here near the 50 area. And as you can see, that pullback was the actual better, more viable or lower risk entry point rather than buying into the viable gap up, which ran into resistance. So this stock, you know, it could go higher. I actually had some of this overnight, but I sold it for a profit, not a big one, but at least a profit off after buying it off the 10-day line. It's still in a weird sort of pod-like position, and that's what's a little perplexing about a lot of stocks here, and that is that there are a lot of names that are in this type of position where they've come way up and they're very pod-like. You guys remember I've talked about Smith & Wesson many times, how this looks somewhat pod-like to me. And you can see, as I've been telling you, I even told you last week, every time it goes up to 30, you just short it, and the stock gets knocked down. You know, and IBD's over here telling everybody that the stock, you got to watch for the buy point of 31 something. Yeah, right, buy it up there like an idiot. But this looks like a potential pod, and they came out with earnings today after the close, I believe, so you want to keep an eye on that because it could turn into something that becomes a short. So that's an example of what I'm looking at. If you look at CRM today getting pummeled after earnings, they actually beat, but they're undercutting these lows here. So I wouldn't be surprised if you saw a rally back to the 200-day line. But you now see, this is what I'm talking about. It's a big, ugly V-shaped pod type formation, and now it's blowing apart. So it's turning into a pod top. Okay, end of story. And it probably already was back here when it started to break down. And what was your first signal? It's when it started to break below the 20-day moving average. So now if it rallied back up to the 200-day line, that would be considered a potential short sale spot. You could have hit it this morning. I guess it opened up just below the 200-day line, but you'll notice it traded back above the line after that. So that would have been difficult to hit it on the opening. Probably if you saw it rally back above the 200-day line, you might look at shorting it there. But again, I think this is tricky. Everybody's saying you got to buy the stock here. It's cheap, blah, blah, blah. I don't know. What is it trading at, Dr. K? What are the estimates, forward estimates, or the PE based on forward estimates? What are those? Like 6 million?
No, we're looking at just 84.
Okay. So here's what this turkey looks like now. So I don't know. It looks like trouble to me. So but it could rally back to the 200-day, and that would make sense after undercutting this low over here on the left side. So that would make sense to me. So I'd watch how that plays out. And then, of course, you have these other stocks like Now. It's a similar situation. You see the V-shaped pod formation. And now you can see it started to break the 20-day. Now, I thought maybe this had a chance at moving out. If the Salesforce report was strong and Salesforce rallied, it could drag the group up with it. So I thought this might be something to look at on the long side potentially for a trade. And as it turns out, it's looking more like a pod, and it has broken below the 20-day line and can't seem to really get above it. So this morning I put a short out on this on the bump up to the 20-day moving average. So I was actually long at first and made a little money there, and then it's backed off from the 20-day line. So I'm looking for this thing potentially to break down from here. We'll see. I mean, the 20-day line would be your stop. But that's something to keep an eye on because all these things look the same. Workday, similar situation. It's actually acting strong today, and they came out and missed on estimates the other day when they came out with earnings. I think it was last Thursday. But they beat on revenues, I guess. So I guess revenues are the magic thing here for Workday, and it's trying to push higher. What's the volume rate on this thing right now, Dr. K? Are we running above average?
Right now, we're 95% above average.
Okay. So let's see. So it's trying to go higher. I don't know. Maybe I'd watch this on the 620 if it fails, but it's pushing higher. I'm not sure why everybody's buying it if CRM is weak. Is money moving out of CRM and into Workday? I don't know. But I'm watching this intraday. I think could morph into a short. I'd watch these because they're all in this typical V-shaped pod-like pattern. Wide and loose. I mean, you call this a pod with a handle, but notice how wide and loose it is. It's pretty ugly looking, actually. And I could see it failing, just as CRM has failed, and now possibly as well. So, and that would all occur within the context of the market rolling over and correcting further. So, you know, you want to have your shorts ready to act on those within the context of a market that's rolling over. So, somebody asked, do you ever find Fibonacci studies useful? No, not really. I don't really need to watch Fibonacci studies. I know some people like what they consider more the illusion of certainty by having a line that you can draw based on a Fibonacci retracement or Fibonacci number, and that just lends to the illusion of certainty. So I think a lot of the Fibonacci stuff works because everybody uses it, but you can a lot of times just use other methods of figuring out when something is pulled back enough. I find there's plenty of ways to do that, and so you don't have to be reliant on another indicator. So I mean, my chart's probably cluttered enough. Go ahead, Dr. K.
I think with there's, as Bill O'Neill used to say, there's hundreds of indicators out there, and it's best to simplify. And he was a master at simplification using price volume action and one of the most developed chart eyes I've ever seen, and using moving averages, and that was pretty much it. And over the years, I've obviously trained myself to be as simple as possible, but no simpler. I think, as Einstein once said, and it takes a lot of doing. As far as Fibonacci goes, it is another tool. I think the bottom line is if you figured out a way that it has predictive value, then go ahead and use it. That's the bottom line.
Yeah, good point.
I personally have looked into it. I've never seen how it could help my trading. That doesn't mean it can't help someone's trading, because we all trade in different manners. It's like a fingerprint, our trading personalities.
Very true, I think. So if it works for you, that's great. But I don't know why people want to always ask us, do you use this, do you use that? I mean, if I use it, does that validate its use? Not really. If I don't use it, does that invalidate its use? If it works for you and you've learned how to use it and you feel like it does add to your process, then that's fine. Yeah, I would agree. But for myself, I don't know. It's just I can use other ways. Just like with MACD and stuff on a daily chart. I use it on the 620 chart, but even sometimes there I don't find it all that necessary. But anyways, CRM's PE, forward P is 240. Yeah, so that might have some issues. I don't know. We'll see what happens. Oh, let's look at this one. I don't know, tail end. Yeah, it's getting the tail end right now, or tail end, whatever. This thing crazy had a pocket pivot here, and it just failed. I think if you bought this, and hopefully you didn't hold it through earnings, but it was worth a trade here. If you were really alert to this, you might have noticed that it undercut the low right here after earnings, because this thing gapped down big time, and then it turned and ran all the way to the 10-day, and now it's failing and now going to lower lows. So that thing looks pretty toasty to me. I'm not really interested in this name anymore. So there's this other one. I thought this was interesting, but I think you had to buy it on this sort of relative voodoo pullback, and once it started moving and showing 10-day, showing that it was going to get back above the 10-day, you could jump on it. That was a 16.6% move in one day, so a little nutty, but playable if you got on it at the 10-day line. But once it has a pocket pivot, again, what do you have? You have strength sticking straight up in the air. I'm not going to buy it. So if you had a pullback to the 10-day line at 1901, I might be interested. But maybe it needs some time to build a flag, and maybe that would occur within the context of a market correction. So that's a possibility. So I can sort of outline, look at all these stocks and sort of outline where they're going, where I might want to come in on them if the market pulls back some more. So just maintain an open mind and watch the setups. My guess is the Fed probably doesn't raise rates, but if they do, they could send the market into a tailspin. So how are bonds doing right now? This MUB is gapping down. That's muni bonds. Every broker on the planet I know has their clients all loaded up on muni bonds because the rates are so good relative to zero, I guess. But they don't seem all that great to me given the risk of potential default, especially in the case of high-paying bonds. I mean, people who had Puerto Rican bonds found that out. Bonds are safe, right? Isn't that what they taught us in Finance 101? Anyways, Square just kind of hanging out, dripping below the 10-day moving average. So that's a little bit you get these Bible gaps, but they don't go anywhere, so all you can do is buy the pullback. So I think maybe you'd test the 20-day line here, but again, this is like not really going anywhere. So, and then you look at FIT. This was moving the other day. Now it just gives up on that, and even 3D. Look at this. Whoops. Here's what I find, that when you're looking for these, a lot of times the best ones occur at the beginning of a market move. Once you get into a more mature market move like we did in August, you start seeing these, they probably don't work as well, and I think that's what you're seeing. So I was looking at Taser, and that looked like a pocket pivot the other day. In fact, it was a pocket pivot on Tuesday, coming up through the 10-day and the 20-day line, and then yesterday it just gets clocked. There was some news, I think, about somebody asking the Department of Justice to look into some case where a guy died after being tased. How pleasant. Anyways, that thing's getting ripped. So, but what do we notice here? Very pod-like. So this could become another. And you know what? I actually tested this on the short side. I think it was last week, just as it dipped below the 20-day line. It was just hanging there, and I get a few cents out of it, and then nothing, nothing doing after that. So maybe now this is becoming actionable as a pod short. But again, there's another pod short. So I'll make some notes here. We've looked at pods in a number of names here. Now CRM, SWHC, Smith & Wesson, Taser. And some of these are starting to break down. So it could be a sign of more trouble to come in the market. If we start seeing more, then that's an issue. Just like Tesla. I mean, this thing's probably been ready to short for a long time. But you can see now you're kind of in this fractal head and shoulders. Can everybody see that? No? Yes? No? Here, I'll draw it. Left shoulder, head, shoulder, shoulder. Now breaking down. Where's the neckline? I think you draw it along here. Probably, like I said, if it hits the neckline, it's going to undercut this low, and maybe that's the bottom near term, or maybe not. Maybe that's where Obama announces that he's bailing out Elon. But I think there's a lot of financial engineering in this company, and it's got to catch up to them if they cannot start selling cars on the scale of their larger rivals, because they're all catching up very quickly. Now notice these metal stocks are rallying today hard. Agnico Eagle Mines undercuts a low, and you can see this pretty clearly here. This is one of my favorite precious metals names, but you can see it undercut this low, and that sets up the undercut and rally. So we're starting to see it in some of the miners, at least in this one. Let's look at a couple of others. Whoops. Let's look at Silver Wheaton. Same situation. Notice how it's testing this low over here and trying to rally. How about First Majestic? This one's way down there, but notice it's undercutting the lows of this formation here, and it's into this little formation here. So it's right smack in the middle of this little base on base little thingy. And maybe it's going to, this is where it rallies from here. So that's a possibility. So you can see that the metals all look, and the stocks seem to be confirming this. They all seem to look like they're in undercut and rally land, and that might mean that they're going to go higher, and we'll find out tomorrow, I guess. Dr. K, would you be holding any heavy positions overnight, or would you just wait and see what happens after the jobs number?
Well, again, it depends. One man's heavy is one man's light, and I think people should understand that because a number is important and it comes out before the open, the market could either gap up or gap down, and therefore their positions could be amplified in terms of how they respond. So just know that whatever your exposure to the market, create a worst case scenario in your head. If the market has say a 1% gap down, your stocks could have a 5% gap down, and so if you're 50% exposed, what does that mean?
2.5%
if that's workable for you, then fine. Yeah, and if that's workable for you, great. But at least at least you're aware, you've done your due diligence to understand what could happen tomorrow.
Somebody's messaging about SWHC, Smith & Wesson earnings report. I already pointed that out earlier, but obviously means that this person did not hear it. So if there's anybody else who did not hear that, yes, they do announce earnings today after the close. So do you want to short it ahead of earnings or play earnings roulette? Do you feel lucky? I don't know. I think I'll wait and see what it does. Let's look at, here's another one that's broken down. Palo Alto Networks. I'm going to go through more of these breakdowns. So that's less, there's no real pod here, just kind of a rolling sort of ugly pattern. But see how you gap down to the 50-day, now you're trying to rally back. I'm not sure what that means. Does that mean that this thing is going to come back and take off? Is it the ugly duckling at work again? Or does it rally up into some area here where it fills a gap and then rolls over again? I don't know, but I'd keep an eye on this. The big breaks are usually your first clue. Here's Splunk, which is kind of in no man's land here. It's below the 50-day, but you had a big gap down. You've undercut this low from early August. Now, I'd look for a rally up to the 50-day. That could set it up as a short sale target. So I can see some things developing on the short side, but I'm looking at the first bounce. One of the things that might happen as another scenario, and what I'll do is I'll have my groups of ideas, long and short, and then I'll work through in my head with a select group of them. These days I'm using more of what I call a basketball team approach, since there's only 5 players, there's maybe 2 or 3 subs, so I'm not looking at a lot of stocks on each side, 5 to 7 to 8. The football team approach is 22 players, 11 on defense, 11 on offense. Sometimes you can do that in a roaring bull market like 99, or it can become a little bit burdensome. So what I'll do is I'll try and work through a handful of ideas on either side, and how each might act and put themselves in actionable position, either long with the long ideas or short on the short ideas. And then sometimes even with the long ideas, I'm looking at the potential for shorting them, and that would an example of that would be Facebook, which looks great. I have to say it's hanging in there real tight in a nice flag, but it's had a nice long move, and it could easily fail. There's nothing guaranteed here. You've had a couple of 5-day pocket pivots, I think, on last Friday and then Monday, which is constructive, and it's holding up pretty tight today. But if this thing starts to break, guess what? It could become a late-stage failed base, and that would become a short sale target. But this one stock I'm watching, I'm going to say my list is Line, which is coming down. Maybe I've got an alert if it undercuts that low. Twilio, Acacia. I do like this name, TPIC, but I'd like to see it pull into the 10-day line. Let's see. What are my other names? I'm trying to remember here. I think that's more or less it. Bob, oh wait, Bob is another one. So I'm watching a lot of these. Mobilize, another one. I'm watching these very closely, and these would be the ones that I would be looking to play on the long side. And it's much easier to watch 5 or 6 things. Like Chris was talking about earlier, Bill O'Neill kept his everything pretty simple, and that included his quote streams. It had like 20 quotes on it. That's all he watched. And so he got a good sense of that. And I think in a market that can get a little bit nutty, it probably helps to focus on a small handful of names. So somebody's asking about Team. That's acting pretty well. So but that was Bible, I think, off the 50-day. And again, you can see this undercut and rally thing where it undercuts the prior low in August and then rally, and at the same time it hits a 50-day, so it's able to turn and head back up to the upside. And that doesn't look too bad. I mean, but I don't think I'd buy it here though. So what's the volume rate on this thing, Dr. K? Is it going to punch a pocket pivot? Pop a pocket pivot?
We're at minus 38%.
Yeah, so it's kind of weak. Yeah, it might be setting up. So, but it's had a pretty big move, and what does that look like? It looks kind of pod-like, an IPO pod. Those happen. So, this doesn't have any earnings, I don't believe it, right, Dr. K? There's no earnings on this turkey, right?
On Team, let's see. It's been positive for a number of quarters. The last quarter was flat. In fact, it looks like the earnings are kind of slowing over the last 3 quarters.
Okay.
Yeah, the earnings line's kind of rolling over on itself.
I think the place, if you're trying to buy it and trade it, it's on the undercut and rally out the 50-day. You see that? That's a setup that I really like. And of course, we're seeing the undercut and rallies today in the metals area, both the stocks and the metals themselves, the SLV and the GLD. So that's a decent. What is BYDDF? I don't think it's a symbol, is it? Oh, it is. Junk. Why are you messing with this stuff? Here's a $6 stock, $7 stock that trades 380,000 shares a day. I don't know. Go for it. Not my cup of tea.
It's, you know what it is? It's it's a Chinese ADR. That's why it trades the way it does.
It looks like.
So it's actually a big company. It's a $17 billion company.
Okay. I don't know.
But it's not that exciting.
Kind of extended here.
It's got some issues.
So buy a bunch of it and let us know how you do. I tend to look at cheap stocks, somewhat askance at them. Here's like VoSI, is a cheap stock, and it's actually worked, and it's coming up. You had a pocket pivot off the 10-day line yesterday, Dr. K, but that, of course, that's a big sign of strength, and it's right up at the old highs, and maybe it needs to base. I've heard there's some positive developments with their products, so I don't know. But you can see this is the type of thing you want to buy on weakness. So with that BYDDF or whatever, I'd probably look to be buying that on weakness if I liked it. I don't like it, though. Team keeps acting to shake out holders, should be bought as low as possible, maybe near 50-day moving average. That's exactly what I just said. So I always love it when people repeat to me what I just said. It's like having a parrot. Ah, they're all morons. And they smell bad too. What is that commercial? Anyways, I love that part, since moron is my favorite word when insulting anybody. Sometimes even
Oh, I
myself.
I
Anyway.
wanted to mention quickly on VoSI, not to get caught up in the hype,
Okay.
because some of the stories are just outright wrong. Some of the stories attribute the their technology to AR technology, which is what makes the Pokemon game so successful. But that's not the case at all. VoSI does eyewear, and yeah, it's getting swept up, I think, in the Pokemon craze. But keep in mind, it's a $150 million company. You know, it's not a juggernaut by any means. I wouldn't even say it's a leader in its field. I mean, they do eyewear, and the barrier to entry in this technology is pretty low, I would think. So, you know, don't expect this thing to be rocketing, you know, 100, 200, 300%. Therefore, as we've said time and time again, keep your stops really tight on this one. You know, and if you have a nice gain, like when we talked about it before it hit new highs, we put it on the list on the 22nd of July, and then you had basically a well over 10% gain at the peak of the trading day the very next day. I mean, that's your gift. I mean, take the profits. That's a huge one-day gain.
Exactly.
So if it does it again, you know, if you bought this yesterday because you've been monitoring it and you like the action, or maybe you bought it a couple days, you know, a few days ago, you know, be mindful to take your profits when you have them, and keep your stops real tight on this one.
Yeah, plus, you know, if you bought it near the 50-day line, you've got like a 20% profit in the thing. It looks like. Is that right? Something like that.
Yeah,
Anyways,
that's about right.
so that doesn't happen too often in this market. Anyways, some other names. You know, the gamers have been acting well. Activision, though, up near the highs. This is another one, though, to watch. Possible pod, but it hasn't broken down yet. It tried to, and you undercut this low, and now you're rallying up. You know, I've been playing this long and short. Now I'm starting to think it might become a short again. But these other names, okay, if I was going to look to short that one big time, something, you know, a major short, not just testing it, which I'll do from time to time, I would look for maybe this one to fail on its recent breakout, EA, and then Take Two has been very strong. It had a pocket pivot down in here 6 days ago. And then you broke out and you ran up higher. Now you're pulling back into the 10-day, which puts you in a lower risk area. But it's also had look at how choppy this is, and notice all the stalling weeks in there. So it goes higher, but it tends not to sustain anything on the upside for too long before it pulls back. But it has continued to trend higher, so it's a little funky. But I'd watch maybe this fail. So I'd watch this group, because a lot of these are way up there, and ATVI was one of the leaders, and it is in pod land to some extent. So that's a possibility. Put that on your short list. Let's see if I'm also watching these other names. NXPI. This is up near these highs, and these guys are a potential buyout. I think that's the one danger. Skyworks. Vanted, look at this thing. This is starting to look funky. You see this? You got a bear flag in here. You got resistance at the 20-day line, and it looking like a left shoulder and a head. And this may be one to keep an eye on. Does it trades? Yeah, it trades like $1.4 million. So it's about my minimum there. But that looks like a short. And then you can look at some of these other pace companies. You see VeriSign looks very similar. Some of these may be maturing into shorts on bear flags here. So something to keep an eye on. Let's see. Oh, somebody was asking about YRD. I thought, okay, I actually wrote over the weekend that I thought this thing could form a head and shoulders, so you could buy it off the 50-day and look for a trade and then expect it to roll over. And sure enough, look at the fractal head and shoulders in this puppy. You can't really see it on the weekly chart, but there it is. But again, here's a stock that had, and I think you can go back to the webinars way back when this thing was at 10. We were talking about it, and it's, you know, quadrupled. No, wait, tripled, I'm sorry. No, it's quadrupled, yeah, from about 10 to 40. And so, you know, at that point, it's getting a little long in the tooth. And it's funny that, you know, people will see this pullback and they want to buy into it, and they don't really look at what it's done. And this is, again, another aspect of what I call the Cinderella principle, and you see this in the psychology of investors constantly, where they see something have a big move and then they just think it's going to, do it right away, and they got to buy the first pullback and it's just going to take off again. And that's almost always not the case. So, Cinderella principle, use it to your advantage. If you made money in a lot of these hot IPOs in August, do like I'm doing, mostly in cash, laying back. I'll test something on the long side. If it doesn't work, then I'll just back away on the pullbacks and just see when I can get some traction. Otherwise, I might test the short side here on some of these names. Anyways, any other questions? And if you look at these big cap names, Apple below the 20-day, it could be in short land. Priceline hanging along the 20-day, but it's sort of pod-like. Look at that, and that's very ugly and sloppy. Goog, let's use Goog today just for fun, and it's starting to break the 20-day line. That's a little bit, double pod or late stage double bottom. That's kind of loose and funky, so that looks like trouble. Microsoft sort of starting to flutter along the 20-day line. So you can see a lot of these are starting to look a little bit funky, like two-day-old fish or day-old fish. You know what I'm saying? They're smelling just a little bit funky here. And that leads me to become very cautious, because if you start seeing these things break down in wholesale fashion, then look out below. Then we really got something going. And that could be starting, today's action. Are we up on heavier volume so far today, Dr. K, on the indexes? Yes, right?
I would imagine so, but let me, actually, I haven't checked in a little while. We are at, oh, the website is slow today.
What is that? I'm going to think that we're running heavy.
No, in fact, it's down. It's IBD, and it's down. It's giving me a 404 error.
I'm showing volume is slightly up on the NASDAQ, but a pinch, less than 1%, like 0.15. But that was negative early in the day. It's been picking up. NYSE volume is up 8%. That's what I'm showing. But you can't really trust that number. But I do think you're probably getting hit with some selling volume today. And you
okay, there it is, yeah. 8% on the NYSE and just up a hair on the NASDAQ.
Yeah, down volume is 2-to-1, more than 2-to-1 on the NYSE against up volume, and it's like 3.6 to 2, not quite 2-to-1 on the NASDAQ. So you're seeing some selling volume today. Advanced decline lines are very negative, 2-to-1, roughly on both indexes, or both exchanges rather. So I don't know, looking a little sketchy here. So I like, having a lot of cash in my pocket. Maybe testing the short side a little bit here. But I'm sitting here with a pocket full of change mostly. Big change. See what happens. But I don't know. This is not looking all that constructive ahead of the number. So I wonder, does the number create a rally or cause a rally that becomes shortable tomorrow? That's one possibility. And so I'll work through my short ideas on that. If they rally, where would they rally to? So like we looked at, CRM, if they rally the market up tomorrow, maybe the 200-day is a place to put it out on the short side if things start to reverse. So, I think the news. Go ahead.
Where it gets tricky is that, as I was saying at the beginning of the broadcast, the markets could initially sell off on a strong report, and then start to rally, because there's going to be a tug of war going on tomorrow, and I think that's going to create heightened levels of volatility.
Yeah,
and the tug of war is simply between, is the Fed going to hike? And if they do hike, is that good or bad? And you can argue both ways. That's why, all these fundamental lines of reasoning, they could be argued pro or con, and each of these arguments is a justified one.
Right.
So at the end of the day, it doesn't really matter. All that matters is what is the price volume action of your stocks telling you to do. But be aware that they could rally and then sell off, or they could sell off and then rally. So, we are going to get some riptides.
How about if they rally and then sell off and then rally again, and then maybe sell off once more?
Exactly. I mean, it could be a bit of a confusing day. Just so be aware.
Yeah, long Labor Day weekend. I don't know. I'm just kind of happy to be where I am for the year, and so far, still relatively early. We're 2/3 of the way through the year, so don't want to fritter away money made so far. And my approach here is, so I'm testing the short side out a little bit here, and not making, some making little, some losing a little, nothing really major. So we'll just see what happens tomorrow, I think. But if there's nothing conclusive, like if we break down a couple hundred points today on the Dow, then maybe we've really got some big issues ahead of us. And so if you get some extreme weakness today and you see a rally tomorrow, my tendency would be to look at that as a shorting opportunity. So, but we'll see. You know, use your 620 chart and you figure out what's happening here. So, anyways, that's really all I've got here. I've got some things I'm watching on the short side, but it's still sort of in a developmental phase. I think you're watching long things or long ideas as they pull into areas of potential support, and see if they become viable. But it's, you know, it's sort of touch and go here. It's very tricky. So I think if you're using an active approach where you're taking profits on extended upside moves, which is something I do, then you're probably already naturally in some cash and have been for at least the past few days, and maybe longer if you look at some of the moves, like, you know, with Twilio, selling into that, or even playing off the bounce here and selling into that. I did that, and then recently you get a bounce off the 20-day, and I'm actually sold into that this morning, looking to maybe buy back on an undercut and just hanging loose. I think there's a lot of potential for erratic, almost bizarre action at times, so you got to be really careful, because if you think about it, when we've had sell-offs in this market over the past year, they're extremely swift, and if you sit there with your finger up your nose playing Humpty Dumpty, you're going to take a big fall. Because if you look at some of the breaks, look at the NASDAQ. Here's a nice break in late June. Okay, you didn't really want to be sitting through the Brexit sell-off on the long side. You wanted to be there with cash, ready to move in on the undercut and rally, rather than, or even short, ready to cover once it started to break, rather than being long, because you don't know what this thing is going to do. You have no idea. Once you see the turn, now you can start acting on that on the long side. Now, if we go back to January, you had a brutal sell-off in January of this year, and of course we had the brutal sell-off in August, and you just see how brutal these things are, how brutal and fast they are. And I think if you're sitting really heavy in stock, when that happens, you could get tagged pretty good. And I think that's one of the dangers of this market, is that when you do sell off, you can sell off hard, and then it'll just sell off really hard, and you're sitting there thinking, oh well, it's going to come back. And if it does, great. You know, like some guy I was running into on Twitter who was long, who got heavy long ahead of the Brexit vote, and then was just getting killed. You know, I wouldn't want to be in that position, because the chances are you'll be forced out somewhere near the lows. Anyways, so something to think about. I think in general you can play it light right now. Don't have to take any huge positions. That's basically what I'm going to do, and test it out, and we'll see what shakes out tomorrow. But ahead of a long weekend, there may not be much in this market tomorrow after some initial shaking around. But, you know, I thought today was going to be a quiet day. Didn't you, Dr. K? I thought there wouldn't be much happening ahead of the jobs number.
Right, exactly. That's what you would think. That's a natural thing, because tomorrow is a big
No.
report. But the market might be telegraphing us something too. Like you said, if the Dow starts to really sell off and we get distribution days across the board, the market tends to be pretty prescient about things, and so it might be telegraphing that it doesn't matter what the jobs number is tomorrow, that the market needs to correct here.
Yeah, basically. So we'll see. So play it close to the vest, everyone, and try my approach. Try just having a few names on each side of the market, and try to figure out what you would do under various market contexts, movements in the market, whatnot. Movements by the stocks into areas of support on the long side or areas of resistance on the short side, and try to work through that and have your trading plan ready. That's what I plan to do for tomorrow. So assuming nothing really works for me today, which is kind of the case right now, so at least not in a big way. So anyways, that's all we've got, you guys. Thanks for showing up. Have a great long Labor Day weekend, and good luck tomorrow. Should be interesting, or maybe not. Maybe it'll just be blah. And we'll talk to you next week.
So long, everyone.